United Breweries, which is in focus after the company announced its quarterly figures. And let's take it straight to the management of this particular company on the performance and what lies ahead. So let's take it straight there then. Hiral, you want to take the first question with Vivek Gupta?
Sure. In fact, interesting conversation here. Thank you, Nisha, for that. Vivek, welcome to the show. Always a pleasure. Your assessment of the quarter, because multiple headwinds, from taxes to the rains, has it met your expectations?
I would say the quarter has been quite mixed as per our internal assessment. Almost 1/3 to 40% of our business has actually grown strong double digit. The states like Maharashtra, Goa, Assam, Andhra Pradesh, Jharkhand, we have seen very strong double-digit growth upward. At the same time, we have 1/3 of our business got impacted severely by rains. So especially in north of India, our business was down close to 20% in volumes. In some months, the category was down 40%, especially in states like Punjab, Haryana. So rains had a significant impact, especially in north and other parts of the country. And then there is almost 1/3 of the country where the affordability has become a major challenge on beer. Like Karnataka is a great example. It's a national capital of beer. It has probably largest number of bars. Bangalore has largest number of bars in Asia. Still, the affordability on beer is becoming a real challenge. The taxes increase over the last 5 quarters is really impacting and pinching the consumer. We saw the same thing in West Bengal, where beer has become more expensive and as compared to spirits, and Telangana as well, where we got a part of price increase, but consumer has price increase because of higher duties have gone up. So there is 1/3 of the country where affordability has become a real issue. We are consistently engaging with the regulators there, and hopefully, they revise and review some of the policies in the coming cycles. But I would say in almost 40% of the country, we feel very strong. We continue to see the momentum, the investments we are putting, giving returns. On the weather, we can't do much. Even this quarter, I was reading a lot about La Nina impact in these states. So probably the growth in some of these part of the countries may be a quarter away. And in rest of it, we have to consistently work with the regulators to bring the data and bring the overall revenue picture for them so that they can take the corrective actions.
Right. Vivek Gupta, given the drop in PAT as well as the margins, what is the outlook looking like going forward?
See, I won't worry too much on the profitability for a quarter because we have been consistently improving our margins. Even in this quarter, our gross margins are better than the previous quarter. Of course, there is an EBIT impact for a quarter, but I won't worry too much on that part because we are also working a lot on productivity initiatives, making sure we variabilize some of our fixed cost. We are also investing in our brands because despite the rains, despite soft quarter, we invested 22% more on our brand and marketing expenses, which was needed because we had in this year, both the Shara and Diwali festival are coming early and also fell in same month of October. So we had a choice to either reduce our investments or continue the investment. And we made the choice that we need to continue to invest in our brands. We need to continue to invest in coolers. We added almost 20,000 plus coolers this year in the first 9 months, which is higher than what we ever added in any year in UBL history. So we will continue to be the category maker. We will continue to invest on this. However, of course, we are learning from this and we are doing more scenario planning. We have done the scenario planning if the weather impact continues, where else we will rationalize more and do more. At the same time, we have also made structural interventions in the last few quarters, which will also help our margins. For example, now 80% of our Ultra Max or the premium portfolio is now going to be locally produced in our breweries, which used to be around 40-45% a year back. So that will also have an impact on our margins. So we have a good balanced plan, and we will continue to invest in the category growth, but we'll also keep looking at various scenarios to do that. The other thing is, our price mix was almost 5 points. However, our sourcing mix impacted our margins this time because of the weather. Three of our breweries were flooded, so we still had to serve consumers, and we had to buy more from some of the contract brewers, which meant that the margins get impacted. So I would say I feel very confident on the balanced plan we have. We always learn from some of these changes which happen on quarter to quarter, and we have a good plan going for coming quarters as well.
Okay. You're talking about a plan, Vivek, that you've analyzed already. You have multiple scenarios in place in best case and worst case. What would the best and worst case growth look like? What are you penciling in right now for the second half of the year then?
See, look, worst case is anyone's there, and best case is also, it really depends on, because we had quarters where we've actually grown double digit as well, because the quarter before there was a double digit growth. But if I have to, in our planning for the next year, for 2026, from January onwards, calendar year, we are expecting 5 to 6% category growth, and UBL growing faster than that category. I do believe that that level of growth is a quarter away because of even in October there were extended rainfall. We see the La Nina impact being written a lot and talked a lot, and especially in North being severe winters. So we need to see that, but structurally I see 5 to 6% category growth not an issue in India.
Right. So what is the potential for further price hikes in key markets during the second half of FY26, especially to offset any sustained cost inflation or even negative state source mix effects?
See, the reality on beer business is that, our net realization is only 25%, which means if I take, 1 rupee of cost increase or price increase on my EBP, translate to 5 rupees increase for consumer, because 75% is the taxation which is with the government. So I think the bigger conversation is the commodity cost will continue to increase. We have seen aluminum prices going up. We are seeing barley prices going up. We are seeing logistic cost increasing, people expenses increasing. All of this will increase, and inflation is still going to be there. But I think the bigger conversation we need to have with government is to rationalize taxes. Because if the taxes are not rationalized, any price increase will have a quadruple the impact on the consumer. So 1 rupee increase in Telangana actually goes to 4 rupees increase for the consumer. So with that equation is a fundamental problem in this industry, which we need to consistently bring. We saw positive shoot in Maharashtra and Mumbai where beer taxation did not increase, and we are seeing a double-digit category growth. We are also very clear that beer has less harm per liter versus spirits. Beer is moderate, beer is natural, beer has less alcohol, beer is more about socializing. And it is extremely important that we separate beer out from spirits or alcobev and have a proper regime which enable to grow this business. But having said that, if none of these changes, we will continue to manage our mix, continue to manage our state mix, continue to manage our portfolio. Premiumization is a good story. We grew 17% this quarter. We have grown 35% for the first half. And that is something we'll continue to drive more. And we've also taken cost initiatives in the last 18 months, which means that any premium we sell from now onwards, we'll be selling at slightly better gross margins than what we were selling a quarter before or even before that. So I think it's a combination of mix, state mix, but also the real issue is taxation.
All right. So the real issue you're saying is taxation, but what about the premium sector and the segment growth and contribution to your overall revenues?
I've always mentioned that we are coming from behind on UBL. We are slightly behind on there. So we expect our premium business to grow 30% quarter on quarter. And we have been able to do that in the previous quarters. This quarter, because of all the other impacts, we were at 17%. We expect to bounce back. As you mentioned, Heineken Silver is growing 34% in the country. We have limited production of Heineken Silver in India. We have only 4 manufacturing locations as compared to 35 locations where we produce our beer. So we have capital plans to extend Heineken Silver production in more locations. We announced a greenfield plant in UP where we are going to have Heineken Silver. We are also working a program in West Bengal where we are going to start investing in Heineken in West Bengal, which will serve the East grid as well. So as we continuously invest in capital, get a supply chain, as I also mentioned, we have a localized ultra max production in many more states. We are very confident we will continue to grow premium business ahead of the category and accelerate and reach our goals there.
Okay, so Vivek, to grow the business ahead of the category, what are the Capex plans looking like for the next 12 to 18 months?
See, we are actually, there are two questions. If you see our capex plans have increased in the last 2 years, you can see from our statements. We are investing in coolers. As I mentioned, we now have 35,000 coolers in the stores versus 15,000 around a couple of years back. So will be sufficiently investing in the capex. I think our challenge is not going to be the lack of capex; it is going to be the execution of that capex, because in many places we need a lot of regulatory approvals to even execute a capex plan in our own brewery. So it's not easy to do business with that. So I think I would say that we will be sufficient to drive category growth and continue to invest in our brands.
All right, Vivek Gupta, thank you so much for joining us and sharing all the details about the performance and way forward for UBL. All the best to you. Thank you so much. And the stock is up almost 0.5% in trade. So it's a good reaction coming in, considering that it's a tepid day of trade overall.